The broadcast is now starting. All attendees are in listen-only mode.
Hi, Face Warriors. How's everyone doing today? Hope everyone in the U.S. had a good holiday. There was some action, mainly in crypto and gold yesterday. Nothing in stock indexes, although we're getting a pretty nice sell-off here. Start off with the dollar. So, it's my belief this is a high, at least a temporary high. Could turn into something more than that. And that this potentially could be a failing rally. Should the dollar begin to correct, line in the sand is going to be around 95.80. Let's see, I think it's more like the weekly. Yeah, you have the weekly moving average here at 95.80, 96, very important. Should it pull back to this area, the dollar uptrend should continue. Otherwise, 94 becomes a possibility, 92 even a possibility. So this is going to be a very important test for the continuation of a move back towards par or so on a pullback. Actually, the pound is stronger than cable. So, that's not a real bullish pattern. In dollar bear markets, I like to see the euro lead, not cable lead. So we'll see what happens there. Kind of a similar situation in US dollar yen. We've rallied back. I think it's a little over 61.8 from last week's high and sell off. So we'll see what happens here. We start taking out 1040. 960 comes into play. 950 comes into play, which was a pretty big area on the way up. So, once we got through that, or 110, we got the acceleration here in US dollar yen. I want to take a victory lap with my partners, with Steve Volge and with Grega. I remember we had a discussion. I brought a few crypto guys in a few weeks ago, and we were trading at the 78.6 level. Right here, you could see it probably better on the daily, but these lows in here, 78.6, held. And I expressed my constructive view of crypto and Bitcoin, and Steve went with Ethereum, which outperformed. It was a great call, Steve Volge, on Ethereum. I don't know if you're still long, but, you're talking about a couple of guys who, were bearish crypto, never talked about buying crypto since we've been a company and since it got hot. So, and then Grega came in to reinforce it with his wave work, saying that what was happening in Bitcoin was, consolidation. It was an ending diagonal, I believe Grega used the term. And that's when we were having this last week. And, I don't think you have to be a genius to know. Maybe I should go even further back. Okay, yeah, this is what was happening. You had the big move, and then all you did was move. That's not showing it either. Anyway, last week was all consolidation. It was this after the initial spike. Maybe I could do it by doing this. See, we have the initial spike all the way to the left. And, what Steve and eliticians would say is corrective action. It was more a correction in time than price. It was almost looked like a bull flag on the 1 hour before. Here, this looks like a bull flag. So this was a continuation move of basically, I don't think we even pulled back 38% of the spike from a week ago. And here we have another leg to the upside. Probably starting to get a little long in the two short term, but I think there's more left long term. So a bow, I don't think anyone, could have taken a foray into it. I talked about a trust that trades on the NYSE GBTC. So nice call, Steve Volge on Ethereum and Greg, and see how the team works. Okay, I have an idea, and I bounce it off of Steve. And then Grega comes in to share his stuff, and he wants to talk about it. So, what a mastermind group this is with these guys I'm showing you here. You know, Blake jokes I'm old. There I am. I don't look too old in a cartoon. There's Joe Buddy and Paulie, Amanda, Andre. Andre helped me a lot with what happened last week in the dollar on Friday because he was looking for 97.30 or 97.40, and it almost got there. And I was looking for a 3 drive. So I'm just saying the collaboration between all of us. I know, I teach surround yourself with traders better than you. And it's almost been 2 years I've been with this team. And I really can say from my hit rate, and I'm not a big rich guy. I trade, a small account, mainly ETFs and stuff, but I've become better and my hit rate's better and my returns are better. And it's got to be the environment and who I'm talking to and what kind of input I'm getting during the day. And most of my input and intelligence gathering, I know I bring guests in, but I really don't need to go anywhere else but here. If I was just in a bubble, in a ForexAnalytix bubble, I really don't need to go anywhere else because I get so much here to help me, point my eye in the right direction or help me avoid bad trades, which is really important because it doesn't show up on your account, but it would make a big difference in your bottom line. So again, if you haven't already, take the trial. It's $1 for 10 days. And I really think, even though you can't make a big judgment, that you'll know in 10 days that there's some good stuff here. So we're getting closer, only a couple of weeks away from the Traders Expo. And the guys are going to have a big party. They're going to have a real big party after get together. And, you're going to get to meet Steve's coming all the way from Europe and Grega from Eastern Europe, and Joe's going to be there. I'm not sure about Blake. Blake and I have a touch of late season flu, I think. But it's going to be a great event. And not only our people, Boris is a keynote speaker. I've interviewed Boris, and, you're going to be able to really get to know the guys. And it shows how much they care to travel, across the ocean to be there to meet our people and potentially some new people to bring into our trading community. So mark your calendars. I believe tickets are free, that we can arrange for free tickets for you too. So I didn't know if there was a charge to get in. Maybe Steve will talk a little bit more.
No, there isn't. They can subscribe.
There isn't? Okay.
They can just follow the link and they can subscribe for free to attend the New York Traders Expo.
Okay, and it's like that for everybody.
Yes.
I mean,
yes,
no matter who. It's not just because you guys are participants. No. Okay.
No. They can,
so a guy who,
and
okay,
also
so
free
a guy
is going to be our get together afterwards, of course.
Okay, lobster, crab, what? Hors d'oeuvres.
First of all, we're going to be serving Grega in a platter.
All right. So it's free for everyone. So the guy on the streets of New York with a bottle and a paper bag, he's welcome to come in too.
I'm guessing.
All right, buddy. All right. Anyway, so there you go. Not too many things are free nowadays, and and priceless at the same time, which is, just talking about it. I think face, although it's free, is priceless. And I would compare the content that we provide every day for free to people that are charging 100, 200 a month for you to come in and hear their spiel. Anyone out there agree with me? Because, I'm pushing the guys to make it, make you guys pay a few hundred a month. Anyone agree that this is both free and priceless? Give me a why. Guess not. Absolutely, Alina. Yes, Jeff Finley. Okay. Yeah, look at all those whys. So don't forget to nominate the whole team for the Nobel Peace Prize in humanitarianism. Okay, so no one could say that we aren't serving our community, although we're also in business, but we are tithing to the FX community by sharing this and having this space webinar going for a couple of years. And speaking about that, that's another good segue for Forest Park FX. So if you guys want rebate checks every month to pay your mortgage, if you're a big, Danny loves us, we love you guys too. So, you know, get a hold of Trent and Justin. They're great guys. You're not going to get, you know, voice prompts. And, you know, I know when I call my cable company, I could be waiting to talk to someone for 20 minutes, you know, and they take $200 a month from me. So here you're going to get a live human being and guys that really know the brokerage industry, the FX brokerage industry, better than most. In fact, they're also regulated in the UK with their IB, so you could see all the different companies that they represent, and they'll find a good fit for you. So reach out to them. Let's have a great trading week, although it's a shortened week. I have a guest today whose handle is DAX30, so I'm just guessing, wild guess. He's a DAX trader, so stick around for that at the top of the hour. And looking forward to speaking to my guest, which is Alex at Extra DAX 30. So stick around for that. Blake, are you here today? Feeling a little better, buddy?
I'm here. Good morning.
Hi, bro.
Good morning, Blake.
I'm, you know, hey, good morning, Steve. I'm feeling all right. I mean, I've been better. I'm one of those people that I don't get sick often, and you know, I doubt I've been. I don't think I've even been sick since you've been here with on our team.
No, you haven't.
No, I don't.
I used to be like that.
Yeah, you know, it's one of those things that I think my son, he was sick like a week and a half ago.
Well, you told the story. You went down to get a cup of coffee, and he was coming down in a blanket, vomiting.
Yeah. That
told the story on the air, and you said, all I want is a cup of coffee, and you ended up having to clean it up. So
Blake,
I remember that.
I have the recipe for you to change that. Just have a fresh one, you know, with Lisa, and send it to the kindergarten. And I bet that you'll stop being sick that rarely.
Oh yeah.
You know, it's one of those things that, you know, you can't escape it if you got kids. And I don't even know if that was it. It just, you know, it came on like Friday night. I felt it Friday night, and it just kind of, you know, just
it's flu season, bro.
Leveled all weekend.
Yeah, flu season in I think 47 states of the 50. It's running around now.
Yeah, so it's really important. The fact of the matter is, make sure you clean your hands and use antibacterial soap and all that fun stuff. Okay.
Let me ask you before you get to the markets, Blake, because this is, you know, something I talk about. I have something only the other end. I have stomach cramps and everything. Do you find yourself trading less when you're not feeling well? Optimum physically?
Yeah, I do. I'm typically, when I'm not feeling great, I'm not entering the market a whole lot. You know, you know, because my focus isn't quite there, so I tend to just more managing positions. But
that's what I tell people to do. You know, some people try and force it when they're not feeling good, and they're not always in the position to make the best decisions when they're in discomfort.
Yeah, and you know, it's speaking of just discomfort, this market's pretty much in discomfort too, because there's just not a whole lot. I mean, we're really trying to figure out which way this market's going to go, and if you look at the euro, you know, we've spent a week already in this really choppy range between 112.50 and 113.40. And it's been challenging, you know, to say the least. I mean, there's just, you know, there's not a lot going on here. And, you know, just today, just moments ago, we were down towards the lower end of this, the support level, and we popped back up with the cable ripping. So, you know, the pound, you know, got a little lift as Theresa May, some news came across the wire about the backstop, and the pound got a little bit of a lift, and it took the euro off of the support. And frankly, I was just I pulled up a chart of gold here. Gold was ripping, and it is still ripping, and it's hard to be bullish the dollar when gold is moving higher. I mean, gold is now. I'm going to talk a little bit about gold here just for a second. You notice the daily chart, we're hitting new trend highs. Relative strength is divergent as we move higher, and we're approaching a pretty key resistance. I mean, this move above 1320, getting towards 1340 is going to be really tough. I don't think it's going to be tough getting there. It's going to be a tough breakout because relative strength is divergent at the moment. But keep an eye on it. I mean, as gold is moving higher, it's like I said, it's really difficult to be long the dollar with gold on the move. Now, silver isn't participating quite like gold. You can see, gold's hitting new trend highs. Silver is not. Let me get rid of this trend line here. Silver is still struggling at the 618 retracement. I mean, we're trying to grind higher here, but gold and silver are both just kind of making their way higher, which, like I said, it's going to be a little bit more difficult for the dollar to really pick up some steam. But I still stand by the idea that as long as the euro dollar trades below this 113.40, it's bearish. That doesn't mean I want to short it right now, because I didn't short it overnight, because the place to be shorting the euro would have been at this 113.20 level, 113.10, whatever. But if you are short, you got to just keep in mind that gold and silver are pushing higher, which is going to assist the dollar moving lower at this point. All right. Now, we're talking a little bit about the cable. The cable, the pound pivoted off this 50% retracement, and it held pretty well late last week. I really don't know what to do with the cable at this moment. I know I mentioned that during the week ahead video. I'm really not trading the cable at this moment until there's some more definitive news about Brexit. And until that happens, I'm just not dealing with it. I don't think there's much to do here. I think you're going to get a lot of false signals back and forth. No real reason to be super bullish yet, technically. I don't think there's any reason to really be bearish technically either as of right now. So now the Aussie has this bear flag developing. The meeting minutes came out last night, but the important data that we're waiting on with Australia is the employment data on Wednesday. And so this is going to be very critical support for the Aussie. And you can see we're not immune to bear flags here. So you can see this other bear flag back a couple of months ago, and we're setting up another bear flag here. And what I'm going to be really watching is the 70-cent level. You can see that 70-cent level is a very big support. Psychologically, it's a big level. There's a lot of support down here, just above 70 cents. So you got to watch the Aussie carefully. And I'm going to, in order to talk about the Aussie, I've actually got to talk about the S&P too. And look at the S&P. We are at what I would call at least trendline resistance. You can see we nudged our head right up against trendline resistance here. There was a chart that one of the guys from my office, he pulled up, and I'm going to go ahead and grab it for you. Let me go indicators, MACD, and take a look at the MACD on the daily. I'm not a big MACD person. I don't typically keep the MACD running on my charts. If I did, you would see them every morning, but they're typically not here. But we are looking like an exhaustion here with MACD, you can see volumes tapered off. The MACD lines are starting to converge, and it's almost similar to what we had back in the beginning of 2018. We've obviously had a sharp recovery in MACD, and we've seen this big move that's probably a little long in the tooth. And so if MACD crosses over, if you see these two lines start to cross over, I think that'd be a further signal that the S&P is exhausting here. And I think that you look at relative strength, we're not divergent, but we're not also in overbought territory. And it's surprising, coming off of such oversold levels, that the relative strength didn't move higher, in my opinion. So, you got to be a little careful with the S&P. We also just hit 161% extension of the last move lower. Well, this is the last big move that we saw. And I would believe, give me 1 second here.
It's 141.4, if I remember. There.
Hey, Blake, if you extend that other line, you have the top line, then you have the downtrend line that it broke out of and held twice a week or so of last month. You'll have a broadening formation. It'll look like a megaphone if you just extend the bottom red line out to where the top red line is.
Yeah,
and that is a topping formation, and it's one of the most difficult things to trade because you keep making higher highs and lower lows. And so, people get bearish at the bottom, bullish at the top, and it's a megaphone. So just a possibility, technically.
Yeah, it's possible. And I mean, between some of the key fibs being hit, relative strength is, looking like it wants to roll over. We could have, you could argue that this is an ascending wedge. There's a lot of reasons why it probably can roll over here. The question is, will we get any downside momentum? And that's, if you want to define a trend, it's in this case being an uptrend, it's higher highs and higher lows. And we consistently are making higher highs, higher lows, higher highs. And so if we make a higher low here, and let's say we only pull back to, like, let's just say 2750, 2740 in the S&P, then you've got to, go with the idea that we're still in an uptrend. But, all trends will come to an end at some point, whether it's an uptrend or a downtrend. And this looks like we are exhausting higher. So, the reason why I bring this up is if the S&P does come under a little bit of pressure, the Aussie, this is going to be the one currency pair that's really, on my radar for a possible short. We've had a nice recovery off of these spike lows that happened in that Asian trade. I don't think that it would be uncommon for us to roll back over here. The Kiwi, it's bouncing around in a range. The dollar Canadian, we're in a tight range right now. I think you'll see some dollar Canadian strength if crude oil can roll over. Matter of fact, if you look at crude, I'll just take you over to crude really quick, and I know Steve probably has more to say about crude. Crude is above that resistance zone. It broke above that 55.50 late in the week last week, and we're actually holding up pretty well, squeezing some of these shorts. So I think crude's going to have to get back below 55.50 in order for the dollar Canadian to show some signs of life at this stage in the game. And I guess one last chart I should bring up is the US dollar Swedish krona. It's not something that I cover all the time, but it's something I watch. And the US dollar Swedish krona, Sweden's inflation data came in extremely weak, and so we are approaching these multi-year highs. I mean, this is, I have to pull up. Let me see if I can pull up Bloomberg really quick.
Isn't that how they say yes in Sweden? Yeah.
Da. Isn't it da?
Oh, da. Da.
Let me.
Velu can tell us. He
Velu.
speaks Swedish.
Okay, Velu, you could say one word in here. That's your.
See if I can get a chart for you guys. Sorry, just trying to get a good chart like for you guys. Let's see here. Let's go to the daily. Let's go to historical. Let's see if we can go to a monthly chart. See, I only go so far back to. I mean, here's quarterly. So we're at levels that we haven't seen since 02. You know, and I mean that's pretty bullish. You know, we could gather some upside momentum here in the US dollar Swedish krona, and that. So this is another chart that, you know, if the dollar really starts to move, I mean, look at this you know, pennant. And I know we blogged about this. If you go to our blog, let me take you over to our blog really quick. I think it was brought up about 2-3 weeks ago.
Yeah, that was your indication for dollar strength.
February 4th. Yeah. And you know, and we had that pennant formation building, and we broke out to the upside, and the dollar has been stronger since then. So I mean, you know, you see the dollar against the euro, that the euro, you know, at that point in time was probably over here around the you know, well, yeah, I don't know. You know, the euro was probably, it's probably like 114 and change, and it started to drop as well. So, you know, continue to keep an eye on this US dollar Swedish krona. If it continues to rally, we might see a further rally in the dollar. All right. So anyway, just a few things that I'm paying attention to. It sounds like we've got Steve here. So, Steve, good morning.
Morning, Blake.
How are you?
I'm good. You sound better.
My throat's a little bit better. So, you know, I'm just stuffy, you know, just trying to get over it. Taking like 5,000 milligrams of vitamin C a day.
Heroin per day.
Yeah, that too. So, anyway, just trying to.
At least
don't forget the whiskey. You know, those hot toddies help you at night too.
Yeah.
All right, buddy. Well, I hope you feel better, and good luck today. And great review as usual. Hey, Blake, that was such a great call in USD SEC. How do I subscribe to ForexAnalytix?
Oh, just take a trial. It's just $1. Take a trial. But hey, also, I wanted to mention, if you guys haven't submitted pictures of your trade setup, kind of an explanation of why your trade setup is the way it is. Remember, it doesn't have to be the most technological advanced one. It's just got to be the one that works best for you and why. Just, you know, send your pictures to support@forexanalytix.com because you have 2 more weeks to get those pictures in. So
someone in being naked last year. I forgot who it was, or I mean, at least no shirt on. Do you remember that?
I don't know. Steve
didn't win
all those.
He didn't. Do you, Steve, remember that?
You
saved it.
After seeing Stelios's picture on the pink flamingo in the swimming pool. There is nothing else, you know, that has actually survived.
Shock you.
In my brain. Yeah, everything else got demolished.
Hey, Steve, great call on Ethereum.
Actually, thank you. Actually, I didn't believe that I would have a. Yeah, no. I'm still long. Actually, I didn't believe I'm going to have a better trade this year than the crude one. But I'm already 20% up on Ethereum.
Yeah, nice.
Yeah, I didn't expect that I would ever be long cryptos or whatever. But you know, it looked good as a trading opportunity. That's why I had said here that this is the first time I'm going to say this, but I'm actually going long Ethereum using a CFD. I was lucky actually. My broker
funny,
actually
we both lost our crypto virginity at the same time.
Yeah, it's a good thing that we didn't do it by losing our account as well.
Well, we would have gotten out anyway, but we did. We're not
no question
crypto
about that.
virgins anymore. So
Of course.
yeah,
Of course.
all right, buddy.
So yeah, it's no, I'm actually still long. It's half a position, but half a position that's 20% in the money is 10% on a full position. So I'm pretty happy. Other than that, thank you, Coach. Other than that, I think that the markets definitely haven't been doing much. I know that many of you were not yesterday online, because of the US holiday. So I'm going to repeat a couple of things, and they have to do with the pound. But before we do that, Stelio, what kind of news did we have today? What do we have to talk about on the macro front?
Just a few things. We had some UK data. So this was average earnings index. It came in at 3.4% year on year versus 3.5% year on year. So small miss. But what we need to do is compare that, which is what the Bank of England do as well, compare that to the inflation rate. And it looks quite healthy, 3.4% earnings gains versus 1.9% inflation. So there's no pinch anymore on the consumer. Obviously, we have Brexit still hanging over our heads, but this is not a bad scenario to be in. We can be sure about that. The other thing we had was Italian numbers, and they were shocking. So we had industrial new orders and industrial sales, which came in at big negative percentages month on month and year on year. And, it looks like Italy is in some trouble. Not only political, but, the economic indicators, the PMIs, they've all turned in a big way. So not looking very rosy for Italy and Europe for that matter.
Actually, this is the one thing that has kept US afloat. The fact that we are getting very bad data from Europe and from part of Asia, and that has kept a bid on the dollar. Speaking of the dollar, I'm going to show the DXY afterwards, because once you're done, because I think that the DXY is actually at quite an interesting juncture. So go ahead, Stelio. Stel?
Yes, sorry, you were breaking up there for a bit. No problem. Two more things. One currency which we don't cover at ForexAnalytix, but we always look at it, the Swedish krona. We talked about it earlier. Blake did. We had CPI today, which
textbook triangle break to the upside. Textbook.
Yes. And we had CPI, which disappointed. It still came in at 1.9%, so it's at target, but it was expected 2.2, and the previous reading was 2%. So it's turning lower. This is in line with most Western countries where we're seeing slowing inflation. Even in Norway, it went down from 3.4% to 3.1%, still much higher. But this is in line with the global slowing growth and inflation. And the other thing we have is trade talks between China and the US will resume today.
The gift that keeps on giving us. I've said many times.
I've said many times, it's on and off. Will they, won't they? It's becoming a bit of a Brexit thing. Until we see some kind of firm result, I'm going to give less and less gravity to these things. And that was, I think that was pretty much it to date. We have tomorrow we have the FOMC minutes, so that's tomorrow.
Inflation readings are anyhow, the banks are ignoring them because anyhow they've decided to ignore inflation. Anyhow, the numbers are not real. For example, you know very well that I'm getting a new car, so its actual insurable value is exactly the same as my previous car when I had bought it new, right? So I asked for a quote from the insurance company. And, my previous car insurance fee was like 950 euros per year. And they gave me a quote now, like 7-8 years afterwards of 1.6k euros. And nice. I'm like, wait a second. This is like 60% higher. What the hell has happened, within this this period? And they're like, no, insurance costs are just going up.
You don't have to go very far. I was looking the other day at my the fees for my MBA, which I did 15 years ago, and they've gone up 5 times since 2002, which is insane, 4 or 5 times. So other than that, we have 2% inflation.
Yeah, or even zero at periods of time here in Greece, or negative or whatever. Yeah, absolutely. Yeah.
Yeah, so that's it for me, Steve. I don't have that much
Okay,
else.
so the DXY, and I bet coach is going to like this. It comes down to the conundrum that we were talking about, several days ago. Triangle or head and shoulders formation. You make your pick. One is bullish, the other one is bearish. But the good thing is that when what happens, right? If this is a head and shoulders formation here on the 4-hour chart,
Love that view.
yeah, you don't
Yeah,
want to
cool.
see. If you want to be
I
long,
didn't
you don't
draw a
want to see.
neckline or look at it as a potential right shoulder, just looking at it as potential failing rally. And then your trend line comes right where that weekly MA is at 95.85. Because to me, Steve, I think if it doesn't hold that, then we have the
Yes.
story changing in the dollar. So yeah, I love
Yes.
that. You're right.
Yes, exactly.
You're like, good call on me liking it.
So the two are the scenarios here. One, we move lower from here, we break the neckline. In this case, we can still view this as a corrective move as long as we don't break below this confluence of supports that you see here, roughly at around 96, 96.10. Because if we do, as Dale said, then the technical situation becomes quite a lot more complex and potentially with bearish implications. Okay. Now, obviously, if we outright break this confluence of resistances roughly, at the low 97s, then we're definitely looking for new highs, which is a likely scenario. This might just be some kind of a symmetrical triangle here. Okay. Now, in between those two areas, so roughly, let's say between 96 and change and 97 and change, there is absolutely no technical reason for you to have a bias. So the situation with the DXY is quite simple. And I do think that, before you take any trade, especially those that are heavily depicted by the DXY, for example, Euro USD, or anything that is, strongly correlated with that, you'd rather see some kind of, a resolution to this technical situation here. Now, I spoke yesterday. I know that you weren't here, coach, but the two pairs I started talking about was the pound, the cable, meaning the pound against the USD, and the pound against the yen, because the pound against the USD has behaved very nicely technically. I mean, we saw an appreciation here within what looked like a wedge. We got an overthrow, and then we got a move lower. But the move lower was, clearly channeled, so very well behaved. And we saw yesterday the attempt of a break higher, and we see some continuation today. And on the other hand, those are all 4-hour charts, by the way. And at the same time, we're seeing the same kind of a technical behavior on behalf of the pound yen, of the gappy. So I do think that the gappy might be on its way to the next target at the 78.6% fib, which is at 145.50. Now, USD SEC is a good mover. Blake already demonstrated that. There is not much I have to add on that. It's definitely one of the trades that, and if you remember, I mentioned that, very specifically, when you have anything coiling for a long period of time, you know that it's a very high probability scenario, and I'm going to copper because it's very relevant to that. It's a very high probability scenario that you have a lot of stop losses accumulating outside of that technical formation. So the same situation applies here with copper. I bet that there are a lot of stop losses and even limit orders, for people to enter long above 286. We're very close to that level. So, this is the moment of truth. You either like it to the short side, in which case you short here and you have a very well-defined, risk-reward ratio to be short, or you wait for a breakout, in which case you should expect a continuation worth roughly 30 cents to the upside, taking the technical definition of how to trade, a breakout from a rectangle, because this is a rectangular range. Okay, so copper also, well positioned to likely provide, a tradable situation, quite shortly. Now, if we go back to the indices, multiple resistances here for the S&P, but no failure yet. The RSI has been diverging, as you see here on the 4-hour chart, since actually the middle of January. So this is like a very, very prolonged RSI divergence. But we need to see some type of an acceleration to the downside to be convinced that this is some kind of high. Otherwise, we might get one more push to the upside, as drawn here several days ago, towards the confluence of resistances at 28.12. But definitely, there's no risk reward to be long here. Several divergences have already started manifesting. Today, earlier on the day, I was monitoring the VIX, and the VIX actually was the first one that moved today. I mean, the S&P pre-market was unchanged, but the VIX had already jumped higher by 5%, and now it's almost 8% higher. So as you see, we had a gap higher here in the VIX, and given the fact that the VIX is at a trend line support, was actually closed once again on Friday on trend line support. That's not really surprising. I'm actually monitoring this support area, and it seems to be producing one more reaction. So let's see if we're going to get something more than just a little bounce from here. I'm still short. I'm out of the money here, but I'm not really troubled by it. But because I really believe that there is a huge, as I mentioned, there is a huge gap between what the market is pricing in and expectations, and what the indices have been doing. This was the longest bull market in history, and I find it quite hard to believe that after the longest bull market in history, we're going to have like the shortest bear market in history, because we went in bear market territory for what was it, a couple of days. Depends on what index you're looking at. So I do believe that the US stocks are bound for at least a corrective move lower, even if we are to see higher prices. Now, having to do with cryptos, I'm going to cover those very fast. I think that this is a legit breakout we have here from Ethereum. I mean, this is textbook what you want to see to gain exposure. That's why I went long, because what happened here quite clearly is bear move with very strong momentum, correction, bear move with strong momentum but less strong. You can see the first derivative is smaller than this one, and the second derivative, and then we have another bear move with clearly reduced downside momentum. And then what do we get? We get range trading, and the trend line actually being contracting. Actually, that was a flat bottom triangle. So there were two potential outcomes here. One of them breaking to the downside once again, in which case, you should expect more downside. So 75 was that area, and the other one was breaking higher and,
Also, Steve, Bitcoin held a 78.6% retracement. I don't know.
Yeah,
Ethereum may have been only 61.8. I'm not sure, but because it was stronger.
And here is Bitcoin. Bitcoin actually produced a nice leg higher, and then started moving lower, taking its time, never fully retraced that initial jump. So I expected that one more push to the upside should manifest from here. And indeed, it's happening. But as I said back then when I went long, Ethereum was
better.
Technically, to me, like better position to benefit from the bounce. And,
you're right.
That seems to be the case.
It outperformed. And Bitcoin was a weak sister on this advance.
It's not, to be honest, it's not nuclear physics, Dale. It's proven that Bitcoin is acting like the blue chip for cryptos. So, for example, when we have crypto risk off, let's call it, a lot more wealth is being accumulated. Bitcoin is gaining percentage
market
of the
share.
portfolio market share, among the people that are trading cryptos. When cryptos are performing better, many of them switch out of Bitcoin to alternative to altcoins. Okay, so it's
kind of
natural
like
to
the
expect.
stock market when people are real bullish.
Yeah, it's
they'll
like
go
high
to,
beta. Exactly,
yeah,
it's like high
yeah,
beta stocks. Yeah, versus exactly.
got it. Good
So
metric.
so I think that was the case, but I still believe that we should see more upside to at least complete a corrective move here, even on Bitcoin. Now, let's go to the bonds, because bonds are obviously very, very important. USD yen, by the way, not much has changed here. I'm still an advocate that the next decent move is likely to the downside for USD yen than it is to the upside. And as long as we're getting capped from this 200 daily moving average and this horizontal support resistance area at 111.50, I would be very, very careful being long. As I said, I would definitely prefer the downside than anything else. But let's go to bonds. So this is the bond. The bond is roughly a similar situation with what we've seen in the USD SEC, not because they had the same kind of formation, they didn't, but both of them had very, very prolonged. I mean, for the bond, it's much more prolonged, but both of them had like long-term consolidation patterns, much longer for the bond. But what is proven to be the case once again here is that once you get a breakout from a very well-defined formation, you should expect a decent follow-through, and that's what has happened with the bond. Now, if you go to the short term, this looks like another triangle. So I wouldn't be surprised to see, another push to the upside, perhaps towards the 161.8. So I would definitely not be short the bonds yet. And if we go back to the treasuries, you'll see that although since the last time we've looked at them, we've had like 2-3 more days of price action. We haven't broken out of this triangle yet. This is textbook symmetrical triangle, and we are getting very, very close to the point that there's going to be no space to maneuver besides, producing a breakout. So I would still want to see risk turning lower within the next few days. At the same time, bonds breaking to the upside, at least for one more push higher. Obviously, that's going to create the opposite move in yields. Here is the yield chart. It would create a bearish breakout in the yields. I would want to see in this occasion a move lower towards 2.5% in the 10-year US Treasury. And, then we can, talk about, a likely recovery. But until that happens, I would still favor this kind of sequence of events. And now if we combine that with gold, oops, wrong place. Here is gold. We blogged about gold several days ago. I did actually in this case, talking about this being a bull flag. So the bull flag has already broken higher, and we are on our way to the target I had set, which is the 88.6% fib at 1340. If we
Very
get
cool.
if we get a risk of move, following here, we should see also gold accelerating towards this area, or even perhaps a little bit higher towards this trend line that passes from 1360 before seeing a reversal here as well. As you see, and this is an indication here, we had some very good momentum in the RSI. That means because the RSI is a momentum indicator. So we had a good momentum in momentum, which has now stalled. So we are already seeing RSI divergence, and perhaps, coach, this is going to prove to be a 3-drive formation, right? If you see the RSI here, we already had one lower low in the RSI here in this peak.
Yeah.
And, we might end up having another lower low if we slowly push towards 1340. So, gold is warning that perhaps it's close to run out of fuel, at least, for a corrective move, at the very least for a corrective
So let me
move.
pose this question. Would you rather short gold between here and your upside target as a possible 3-drive, or short silver as a failing rally between here and 1590?
Definitely silver is looking like the weak
Okay.
sister here. So
Okay, just curious.
I think silver is the option for
Preferred short.
bearishness. Yeah, absolutely. absolutely.
It's
So
a preferred.
silver, I think, is going to underperform gold in this case even more, perhaps.
Yeah.
So
Let's see that gold silver ratio. It's really moved in favor of gold for
hasn't been doing much, as
several
we had
weeks
said.
now.
Yeah, it has held this area. So as we had said, the only
Right
bearish
shoulder coming, Steve. 85 or so for right
perhaps,
shoulder.
but that's what I want to say. Right shoulder can easily extend to 85 and change, right?
Right.
And
Right.
then if we do that, and then we come down to 81 and 81.50, let's say roughly, then then we can start talking about a very, very potent potential
Great look, man.
topping formation. But look at this, because it's worth paying attention to that as well. Look at the RSI here, right? We had a very decent breakout in the RSI, because the RSI was very clearly indicating a turn lower since we were here. So since we were there, that followed with a very, very nice RSI divergence for a decent period of time from here to there. And then we kept respecting this trend line until very, very recently, in which case we broke above it. So the RSI is also telling me here to be quite careful trying to be short the gold silver ratio for another move lower. So yeah, it looks very likely that we're going to at least come up to retest the 85 area, and let's see what happens from there. Because if we break above it, then we remain in this appreciating environment, in this very large, very long-term ascending wedge, which inevitably, sooner rather than later, is going to produce a huge failure in the gold-silver ratio. But given how long-term that is, that might even come in 2 months from now, 3 months from now, 5 months from now, right? So jumping the gun here is quite dangerous. Let me open the question box and see what we have. We do have an interview today. You said it before with DAX 30. You said,
yes, buddy.
Kalispera Costa.
You have time. Yeah, you have time to go ahead. You have time before the end.
Thank you for your messages. We love you guys, etc. Thank you. Could you have a look at the gold sec? Okay. Okay, I can do that for you, but okay. I can tell you in advance that it's going to be more bullish than gold dollar, right? I mean, we know that the USD SEC is doing very well and it has broken higher. So sure, let's have a look at it. Oh, actually, we don't have that. Okay, the way we can do that is multiply. It's simple multiplication. We're going to multiply gold USD with USD SEC. Here it is. Gold SEC. Yeah, as you see, the gold SEC had also a very bullish formation here, right? Triangle. Let's turn it red. There it is. Big breakout here. Very, very clear technical formation. A symmetrical triangle we had here also, as we had in the USD SEC, we had in gold SEC. And, a very bullish magnet, a very bullish breakout. So let's measure the triangle's height here. Let's assume the less bullish scenario, which is this width, this height actually. And because we could also take into account this height from here, but even if we take that as a possible scenario, the 161.8 comes quite higher there, and the 200% extension is going to come even higher than that. So yeah, absolutely, it still looks very, very bullish. So yeah, if you want to be long gold, it looks better being long gold against SEC than against the US dollar. But even by looking at the gold against the dollar and looking at the chart of USD SEC, you could see that quite clearly. Bob says my MBA only went up 3 times since I did it. Yeah. Outlook for pound Kiwi. Sure, we can have a look at it. Blake, are you still hot to trot on the USD MXN? I don't know about Blake. And, this is not to go against what Blake thinks, because I can tell you with absolute certainty, because I'm his friend and partner, that Blake is doing very well in the markets. I mean, I know, I've seen his account several times, but I disagree with him in the USD MXN trade. I think that the USD MXN is very, very likely to fail here. I view this as a corrective move higher. So I respectfully disagree in this case. And it doesn't mean that if I end up being right, I'm a better trader than Blake, because, from one trade, you can't judge anything. But, I would actually not even find it hard to be short USD MXN. I like USD MXN to the downside here, especially if we break below this ascending channels support. So I don't know what Blake is doing with the USD MXN, but personally, I would rather be short than long. Nifty. Okay, let's have a look at the Nifty, and then I'm going to have a look at the pound Kiwi as you asked. Don't worry, guys. Once you turn 65, you'll really bitch about inflation, especially when you've been told there is none. I know exactly what you mean, Ziggy. Steve, do you think the Russell 2000 is a better short than the other indices? Lately, the Russell has been exaggerating both the moves to the upside and the downside. So it's very likely, yes. How do you see? Oh, this is a question for me for the USD MXN. So I already answered it in advance. Yeah, I like it the downside about the USD MXN again. Swiss, I suppose, also not a lot has changed. Thanks, Steve. Let's have a look at it. Don't worry, we're going to cover all the questions that you asked. I'm not forgetting any of those. So Swissy, here it is, a pullback, but so far this pullback doesn't necessarily look anything else than corrective. Actually, we're retesting support resistance area. Now, as I said the other day, the only bearish scenario I see here about the USD Swiss is if this proves to be a triangle, a valid triangle, and this is a resistance. So in this case, I would be worried if we see another push higher towards 1015, 1020, and then we get a rejection from there. That's the bearish case scenario, because of course the bullish case scenario is going to be making it up there and then also breaking above 102. That would actually be quite a bullish scenario. It would point to much more upside than the one we've already seen. Okay. Blue chips for cryptos, isn't that an oxymoron? Yes, it is an oxymoron. It was just an example. What is DXY comes off? What if DXY comes off? Yeah, you would have gold and silver rally. Depends. Depends, Costa. It depends. It depends because, for example, if we extend the same logic, we shouldn't have been seeing gold and silver doing well with dollar rallying, but we have seen that, right? A question about a potential bear flag in USD MXN. That's exactly how I see it. Yes. I see this as a bear flag. So yeah, that's my point of view. Okay, let's go to Nifty. Let's go to the crosses of pound that we had questions about. So Nifty, and here is Nifty. And unsurprisingly, for those of you that have been here, I told you that you should be careful very, very much with Nifty because it looked to me like a failing rally. And I do think that we do have a failing rally. And as you see, we're now testing another critical area of support. If we especially break that, I think that we get an extra confirmation that Nifty is heading lower. And you can even see that potentially as a leading indicator for what might happen in US stocks as well, right? We have a failing rally. The formation was quite textbook. I mean, it's a pennant, right? So I would expect at least one more leg lower, and that's what we're seeing. Now, let's have a look at the crosses of pound, pound Aussie and pound Kiwi. Pound Aussie, the bullish point of view is that we once again held this ascending channel support. So, as long as that's the case, there is no real basis to tell you, okay, I would be very bearish here. At best, you can be neutral. On the other hand, pound Kiwi doesn't look that good because it already produced some kind of a breakdown here, but it's still retracing. So I have to say that in both cases, I would not jump the gun in any of the directions I zoomed out. So you can see that, for example, pound Kiwi is in the long term. Okay, coach, I heard you. Okay. I know you will.
Oh, I'm breathing. Okay. No, I'm not rushing.
I know, mate. I know. I'm just joking with you. I'm messing with you.
Yeah.
By the way, I don't know what you did with Skype. I tried to abuse you before, but we got no message.
Oh, yeah. Thank you, guys, because it throws, it throws my train of thought off. But thank you for reminding everybody to participate in that, Steve. I appreciate it.
You should have seen me in school, actually. I was... oh, yeah.
I know. Troublemaker.
I was a little bit of a troublemaker. Not in a bad sense, in a good sense,
All right. That's all right. You'll be going to the office to talk about Jason in a few years. The principal's office.
That's going to be interesting. That's going to be interesting.
All right. So you done?
Yeah, I'm done.
Yeah. Okay.
So I think
again, great calls on gold, Steve. Yeah, great calls on gold and Ethereum, and like I've said, really don't need to go anywhere else. So there's so much great collaboration here with the team and so much talent here that it's a one-stop shop. I'm not saying I don't look around.
If you're in the area of New York or nearby, come visit us and spend some time with us in real life as well. So just join in the expo and come to our get together afterwards. We'll be happy to see you.
Yeah, I invited Donald Trump to see your presentation. So you might have the president there. Huh? That would? Yeah, you could talk about economics with him.
Yeah, although I don't think he would want to hear my opinion on the U.S. economy at the moment, but yeah, okay, fine.
But he would start tweeting about you, and then you get like 100,000 followers. So anyway, Alex, I see you. And Steve, thank you. Stel, thank you. Blake, attendees, stick around if you're a DAX trader or any kind of trader. I've been looking forward to this interview for a while. So I'm making you the presenter, Alex, and look forward to hearing your voice, seeing your screen. Drop-down menu above you. You got it.
Yes. Thank you very much. Can you hear me?
Can, Alex. Great to meet you and hear your voice.
So, good morning, Dale. Hello, guys.
Very nice to meet you, Alex. So I told you I was going to start here. You could hear me clearly, right?
Yes.
Okay. So, it's a long and winding road in trading, but it's also a very interesting road on how people get involved in this in the first place and, what they were doing prior and how they ended up doing this. Who do you have to blame for you ending up in this industry?
It's a very good question.
And more importantly, have you forgiven them?
Yes, I did. Actually,
okay. So go ahead. Tell us about your story.
I got involved in this stock market thing probably in the year 2005, 2006. I was working my first job and put my savings, like every other good Austrian, into my bank, into a bank managed fund or life insurance or whatever. And
conservative,
yes. It was
okay.
That time of the stock market where everything went up. There was only one direction. And for some reason, I don't know, the first broker houses emerged in Austria, and for some reason I thought, well, Alex, you can do it better than your bank.
Okay.
And I decided to open an account and closed my bank managed fund and put all the savings into my brokerage account and started buying single stocks, American single stocks.
Yeah.
And actually, I did not know what I bought.
Okay.
And it was right at
Why did you buy them? Because of what you heard from others, and then you didn't do the due diligence yourself? Is that what you're telling us? I mean, what sparked you to buy these things anyway? You read about them in a newspaper, you just knew the brand, like Apple or something like that, and said, yeah, everyone should own Apple. Was that how you bought?
Yes, I knew the brand. But actually, it was the time where everything went up, and so I thought it goes up forever, you know?
Yeah.
And then we had summer 2007, and it stopped moving up.
Right.
And
so this is where you learn your lesson in risk management and leverage.
This was the first. This was the first lesson, and I almost lost everything. And I came up with two questions to myself: learn how the stock market works, or leave it. And actually, I decided to study the stock market, and by then it was 2008, and I got into technical charting, and
who influenced you? Who influenced you with your technical work that you do? You know, we all have, you know, people that we've seen or learned from. Did you have a mentor at all, or are you completely self-taught?
No, I am completely self-taught.
Okay.
I read books, literature, for sure. Yeah. But for the most things in my life, I'm this self-taught guy.
Okay.
If you know what I mean.
All right, so let's see your setup. Let's see your setup on the screen. Right now, I'm just seeing a picture of you and your Twitter handle. There we go. So there's your setup. So that tells, you know, looking at lunar eclipses. Okay, so Balkan. So it looks like you integrate a lot of different kinds of work. You have these fan lines that look interesting to me on both the top and the bottom, and obviously, you're in Austria. Is that why you gravitated towards the DAX?
Yes, that's correct.
Hours and more of a native market to you rather than the S&P.
Yeah, correct. Because
right.
I think most people in Europe trade the German DAX because it's a very liquid market.
Okay.
And, yeah.
Okay. Interesting. So tell us a little bit about these fan lines and what they represent.
I just want to
go ahead.
Tell you how I came to those lines, because that's the very last aspect, GAN. And after technical analysis and when I got comfortable with charting, started trading index derivatives, and it got more and more and more. And I think it was 2011 was a big time of decision in my life, because my broker called me for some client event. Okay, you trade with us, you trade much. You're not bad. We want you to invite you for client event And actually, this was the time where I got involved with the finance industry, with the professional finance industry. And 2012, I actually started working as an asset manager in Vienna.
Wow, right near the bottom, right near the DAX low of 2011, late 2011. Good timing, man.
12 I started.
Yeah.
I have a completely different background. I studied medicine and actually 2009, 2010, I started my medical career, and I quit it. I quit it for trading in the year 2011.
Wow. Were you already a doctor?
Yeah.
Okay. What was your, did you have a specialty?
I was specializing in reproductive medicine.
Oh my gosh, what a leap. Not many people would take a leap from a career like that. So, wow, you obviously you didn't enjoy it that much, did you?
Excuse me?
It couldn't have just been the money, right? Because you make good money doing that, right? So, I mean, what was it that made you give up medicine for trading? Because I've never heard of anyone doing that before. I mean, doing both, but not giving it up for the other.
Doing both wasn't possible.
Okay.
Because when you have to work when you are at the clinic, you cannot trade the DAX for obvious reasons.
Right. Okay. I got it.
And actually, this time it was a big transition in the medical system here in Austria, and
it went more socialized.
It became more bureaucratic, and I would say,
and less money.
Yes, less money.
Okay, all right.
More work for the same money, actually.
I see. Okay.
So I took that decision. Yeah. I mean, medicine is just, I like it. I still like it. I love it. I'm still interested in, but trading is my life now. So it was the right decision. It was the right decision.
Okay. And, well, you can look back now and see that. So, okay, that's a very interesting part of your journey. So, 2012, you're now in the finance industry. You're working for what, an asset gatherer, a hedge fund, for who?
It was a fund. It was a small cap fund, small firm in Austria. We had 3 funds running, and we managed it. I actually questioned myself at this time because I was settled with chart tech and all those chart technical aspects, and the question for me was, what makes the stock market, you know?
Yeah.
And I wanted to know more about that factors affecting the stock market besides from economic data.
Right.
And
so you start looking at time with Gann and cycles.
This was the final stage. Yeah. This was not the beginning.
What do you think of this statement? I heard it from a guy I interviewed. The market's job is to convince you it's something that it isn't.
Yes. At this time, I would sign that statement. Yeah.
Okay. All right. Yeah. Okay. I love that line.
Yeah. Because in 2012, actually those factors, and I had probably from my medical background, I was looking for a let's call it neuropsychological approach, which affects the humans, the traders, buying and selling stocks. And
I mean, like NLP?
not necessary.
Okay.
The thing I discovered, or the thing I went into, actually was, I'll bring it here. Geomagnetism and the solar activity.
Oh, okay.
Which affect humans' brains.
Okay.
And
is that off of whose work is that? Was that like Wheeler? I know there are a lot of people that the sun and what kind of cycle it's in matters a lot to them.
It's not actually the sun cycles. It's the solar activity itself. Yeah?
The sun spots.
Right, the sunspots and the coronal mass ejections, and those particles, which are ejected into space and to Earth.
It's been pretty dormant lately, hasn't it?
Excuse me?
It's been pretty quiet on the sun as far as that's concerned, which is some people will interpret as a bit bearish when there aren't a lot of those ejections or solar bursts of the quiet nature. Go ahead.
Actually, here we are 2019, and we're at a low as far as sunspots, active sunspots is concerned.
Looks like it doesn't do anything until 2022 either. You have it projected out there.
Yeah. Right.
Very low for the next 3 years. Okay.
But actually, in that time when I started dealing with that, 12, 13, and 14, it was pretty good. And I got the data from some NASA website, and this was public data. And you could correlate quite well those things to the stock market.
Did they help you with turning points? In the market? Okay, so
not necessarily turning points, but times of higher volatility.
Okay.
And you see that paper from 2003, the impact of geomagnetic storms on international stock market returns, which actually proved this. When you look here at the conclusions, statistically as well as economically significant.
Interesting.
Yeah. But for a sudden reason, it stopped working. And last week, I was looking for other scientific sources for this effect, and came up with a paper from the ETH Zurich. It's a well-known technical university. Geomagnetic storms and the stock market from 2018, with a nice conclusion. The causality between geomagnetic storms and their effects on the power grid, which would in turn affect transition speeds of trades for high-frequency firms. So the conclusion is that basically the machines took over by now, and there are less traders, and so it doesn't have the effect it had once.
Okay, so it had more effect on humans, less effect on algos and machines, and less it's such a severe situation that it puts down the grid, and then no one can trade. Okay, interesting. Okay, go ahead.
Then I came into cycles. business cycle, 1 year cycle, 5 year, 9 year, whatever. And question myself, what makes cycles? Actually, what is time? And I got into those astronomical things, planets and solar system.
Okay. Well, I interviewed a guy named Norm Winsky, and he said first and foremost, Gann was an astrologer.
Mm-hmm. I'm not so in astrology. I'm more the astronomy guy.
Yeah. Well, yeah. So he was an astronomer because but he was an astrologer because he used astronomy to predict market movement. So, some people don't, an astrologer isn't necessarily someone who says, is going to draw up your chart and tell you, you should get married next week. they can, I don't know, maybe you'd want to see another one for a second opinion, but, they do use planetary, and transits and retrogrades and all of that. So you have gone to every esoteric form of analyzing the market that's out there so far that I understand. And how do you put all that together? All those different disciplines, and what's it telling you about what's going on now? So now that we know you've studied almost, a lot of the lost arts. Mm-hmm. There aren't a lot of guys out there that really still use Gann. Do you have a Gann wheel? Do you use a Gann wheel?
No, I don't use it.
Okay.
Basically, I use two aspects of Gann, and that's the geometrical aspect, geometrical mathematical aspect, and the astronomical aspect. As far as eclipses and celestial phenomena is concerned.
How about planetary oppositions?
Yes, absolutely.
Okay. See?
A very good example.
I'm crazy like you. I've been called a lunatic.
Very good example. Planetary opposition. Over here. There was a Mars opposition on July 27th last year.
Yeah.
On the same day, we had a lunar eclipse. And so for me, it could have been some turning point as far as time is concerned. And actually in the European market, it was right there, July 27.
Nice.
Yeah. Yeah, you can see what happened actually.
Okay.
So this factor time is very important to me. There are some.
What kind of time windows do you see coming up here? Any particular event? We have a supermoon today, right? Does that mean anything to you?
Probably yes. More important is the fact
I like your charts.
144. It's a very important number for Gann traders. And I always play with that 144, either in trading days or calendar days. That depends.
So we're almost 144 away from what previous cycle?
Correct.
Okay.
So in my opinion, we could expect some change in trend by the end of this week.
Okay.
we have to
So,
wait.
I mean, you're looking at the DAX. The DAX recovery has been very weak compared to what's happened in the U.S. So,
Yeah.
but we have been heading up all this year since, the end of last year. So would that imply that you'd be looking for a turning point this week to send the market back down with trend?
Correct.
And you'd be looking for, okay, so
Correct.
you'd be looking for a
Because
change in this counter.
Absolutely not convinced in this rally we saw in January, and that steep decline in December. I like to call it probably as inefficient market, because this timing is too perfect for me. December down until the end of December, and then all the way up in January. It's
You mean manipulated market or inefficient market?
Inefficient.
Manipulated.
Inefficient.
Okay. It looked inefficient on the way down with the gaps and so forth. The market structure
correct.
Couldn't really give you some, that to me is a kind of a danger sign when you don't trade through there, but you're gapping through there. Shows that there was nothing to absorb the selling for a while anyway, until
correct.
I don't know. Maybe Draghi went in and did something.
Yeah, correct.
Yeah. Okay. What's
anyway,
a Balkan? What's Balkan?
That's bar. One bar, one candle, one candle.
Okay. Okay. Oh, the 144. Okay, I got it.
144 bars equals 210 calendar days in this particular.
Okay. Cool. All right. So Balkan, Austrian for bar?
Bar, yeah. So it's either the trading days. One trading day represents one bar in the daily chart. So it's either those 144 trading days or the 144 calendar days. Yeah.
Okay. So do you just trade your own account, or do you have a business model, website? No. If so, just you trade for yourself.
I trade for myself since 2016. I quit as a fund manager by then. Because it was kind of boring. Buy stocks, sell stocks, over-regulated, bureaucratic, and I feel much more comfortable.
You like freedom. You're a maverick. You like to have.
Yes.
So time is your most precious currency, isn't it?
Yes.
Right. All right. So you don't have a website, and you're on Twitter for what purpose and mission? Sharing your work. Why do you do it?
Because I think the finance community can learn from every trader and each other. That's my mission.
Okay.
And I think Twitter is the most effective tool for that.
Okay. So you're doing it to, kind of, I know that when I put out forecasts, you're more accountable when you put it out there, because, you're really putting thought into it. Yeah, no one is.
I'm far away from perfect.
No one is. Only God, bro.
Yeah, right.
Anyway, so your call here, anything else besides the DAX that that's on your radar right now?
I trade the DAX actively, but I monitor like the American market and currency markets. But I only trade the DAX actively.
Interesting. Well, you know what? That I tell people. Tell me if you agree. That I knew people on the trading floor that were in one pit for their whole career, for decades. And they knew one market like the back of their hand. And for me, when I start looking at too many things, I lose my focus and concentration. So do you agree with me that it's a good idea? You could do a lot of screening, but it's best to know, one or two, or the most three markets that you would trade?
I absolutely agree. I'm a very visual person, and I need those charts. I have a software running in the back for my trades, but I'm a very visual person, and I always see this chart, even when I sleep. So you can wake me up.
You dream about trading? You dream about trading?
No, not dreaming, but it's always on my mind. So it's a big part of my life.
All right.
I live trading.
I know. Before we had charts on our computers, Alex, I used to have a paper chart book, and I carried it around with me everywhere I know. I would draw lines and spill coffee on it and everything. So, do you do anything by hand?
I still have it.
You still do it by hand?
I still have a log, and to write my thoughts and
okay.
Yeah, everything what
makes it real.
It makes it real, yeah. And you can feel it.
Okay, so there you go. Journaling, very important.
Yeah,
writing down what you did, so you know what to repeat and what to avoid. And something about writing, when I brought up NLP, that's what it is. You know, when you write something down, neuro linguistic programming, it has more impact on your it has a higher impact on your mind than just looking at something and not writing it down. So what a great interview, buddy. It was very interesting. You're a very interesting guy to talk to, and I love the esoteric stuff that you do. If you could give one piece of advice to traders to wrap this up, what would it be?
What would it be? Don't get fooled by the stock market.
Okay. All right. So that was Alex's life lesson. So don't get fooled. Do your homework. Prepare. Trade, mini contracts for a long time until you master it. And Alex, your Twitter, I think Alex is a great follow. And you can follow him at you got it up there again. Okay, there it is. Take a screenshot, because otherwise you'll just put extra DAX, but it's XETRA.
Xetra. It's Xetra. It's the electronic trading system of the German stock exchange. So
okay.
Xetra.
All right. Well, you're now my trading warrior, brother. Like it or not, Alex.
Thank you. I'm very happy about that.
All right. Well, really great meeting you, and thanks for sharing your journey. It was very interesting, and all the work you're doing, and the 144 time frame that's due this week. We'll keep an eye on it, and we'll have to do this again down the road. Thank you for edifying our community today.
So many more aspects when it comes to GAN. I can't cover it in 30 minutes. So.
Okay. Well, it's a deal and a promise. You'll be back here.
Thank you very much. Thanks for having me, Dale.
All right, Alex. Thank you very much. So, everyone, that's a wrap for our session. Good hunting. The dollar faded. The yen is fading. Remember, most of all, don't just count your pips, count your blessings. See everyone tomorrow. You're welcome, Alina. See everyone tomorrow. Thank you again, Alex.
Bye-bye. Thank you.